Pretty rough week for the Dow and the S&P. They fell 4 out of 5 days. Here with his own thoughts on where the market goes from here is David Rolfe, Chief Investment Officer at Wedgwood Partners. Good to see you, David. Welcome.
Thanks, Sue. Glad to be here.
You know, 4 out of 5 days has some people down on the floor of the New York Stock Exchange saying that the big rally is over. Is it over, or is this just the pause that refreshes?
I'm a little nervous here. We're not market timers per se, but this market's been up nonstop, and we're increasingly finding it hard to find true bargains to put in our portfolio. And we typically only own about 20 or 22 stocks, so the pickings are rather slim, at least from our vantage point these days.
Well, let's go to some stocks which our viewers have asked about, beginning with one that sort of meets the sort of description you just had. That's come a long way. Ben writes, would love to hear your opinions about Tesla. The stock has gone up very fast. What does the future hold on Tesla?
Well, I think the future for the car company is terrific. But as it pertains to the current shareholders, I mean, the stock's up 475% in the past year. And a lot has to really go right for the company to make an investment in these shares at current prices, I think, to be an attractive investment. So I think it's a great car, a great potential business, but I think there is so much reflected in the current stock price. I think I would head for different areas right now.
All right, let's move on. And Gregory asks us to please discuss Hain Celestial. What do you think of that?
Same kind of story. I think the stock has far outperformed what the business can do. It's a great business, but that stock has compounded at about 55% over the past 3 years. And when you look at the current valuation, it's almost 30 times price to free cash flow. I think the stock is well ahead of where the business growth is going to be.
All right, let's go on to Biogen IDEC. Mohan writes, is Biogen IDEC a buy at this price?
I think I'm going to go 0 for 3 today. It's great business, lousy stock. Very similar metrics. Stock's up better than 50% compounded over the last 3 years. A $10,000 investment in these shares at the beginning of 2010 are already up over to $40,000. And again, here's a stock that's on any valuation metric is very, very rich.
So where would you put cash to work right now? You like Apple, you say? Why?
Well, it's been a tough year, no doubt about
Right.
it. We don't think Apple is a broken growth company. We think their ecosystem is alive and well. We can see the light at the end of the tunnel for some new products. In the fourth quarter, it's going to continue into next year. And so 2013 was a year of investing in CapEx, buying back the shares. We think fiscal 2014 is a resumption of growth. And at little more than 10 times earnings, we think the risk reward is very attractive.
And you own the stock, correct?
Yes, we do.
All right. David, thank you. Have a great weekend.